TraderXO on the show, who gave us his thoughts and thesis on the market. Not only did he do that, but he gave us a bit of an insight into how he trades and how he manages to nail the market so consistently using simple but effective trading tricks. All right. So today, I wanted TraderXO to come back on, and he's kindly agreed to do so. We're going to be talking about Bitcoin. We're going to really focus on Bitcoin, but not just about what Bitcoin is doing, but more so about what we can do to trade Bitcoin better. All right. I know a lot of you guys are really focused on making your trading a lot better. All right. I've received a ton of comments about things along the lines of how to use risk management, tips and tricks on trading, tools, and so forth. And I'm going to be releasing a TA series that promotes that. All right. And I'll be doing that for you guys. But today we're going to have TraderXO on. He'll be on in the next 2 minutes. So if you haven't already, like the video, show some support. It does help with the algorithms. Subscribe to the content because this will be a video that you can watch later on. It will be in the special guest playlist, which you can go onto the YouTube channel and you can go ahead and find that. This episode is sponsored by Prime XBT. Let me bring that up right now very quickly. Just bear with me. I do need to shout out Prime. One moment, please. Prime XBT. This episode is sponsored by Prime XBT. You can sign up to Prime XBT using the link in the description below. It's a good UI. It's a decent system. All right. If you like the content, if you feel like the content is good and you're enjoying it and you're learning from it and you want to expand your trading, why not? Feel free to sign up using the link below. You don't have to trade using real funds, but you can check out the system and see how it goes and so forth. Another thing I'd like to announce today is that we, as In It for the Tech, have launched a Telegram channel. The link can be found at the top of the description below. Make sure you're tuning into that. Make sure you're subscribing to that. A lot of content will be coming to that Telegram channel for you guys and for free. That's the most important thing. Last thing I want to talk to you guys about today, before I bring XO on, is 50% of the people that watch these shows aren't subscribing to the channel. So if you have a second and if you feel like you're learning something and if you feel as though you're liking the content, it takes a second. Subscribe to the channel, see, support the content, etc. Always leave your comments, always leave your feedback. I'm always taking it on board. The great thing about this channel at the moment is we're still at the early stages. What does that mean? That means that I see your comments, I see your feedback, and I can take it on board and help make this stream better for you guys. We have 115 people watching here. Let's give a quick like spike as I bring TraderXO on, and we'll have a quick little talk about Bitcoin before we continue to talk about little tips and tricks that we can do for the market. Okay? Cheers. Thank you. Hello, TraderXO.
Hey, NJ, happy Monday. Hope you're well.
Happy Monday, TraderXO. Happy Monday. Thank you so much for coming back on the show. It's a real pleasure to have you on, man. It's a real pleasure to have you on. How are you?
Good, man. It's good to be back. I've been pretty much celebrating the ETH festival, obviously, the last few days, and literally just come back to the charts. Haven't got a clue what's happening out there, so it's going to be a session. We'll just make it up as we go along. Hey, why don't we do?
Yeah, definitely, man, definitely. Well, Eid Mubarak to you and your family and anybody else in the chat. Eid Mubarak if you were celebrating, and even if you weren't celebrating, then Eid Mubarak anyway. Yeah. So XO, I'm just going to go ahead and ask you straight away, right at the beginning of the show, how low do you think Bitcoin can go?
To be honest with you, I think it's a question of, I'm not sure how low it can go. I think there's one level that really stands out for me, and that's the origin of the entirety of the move up to 69K from around about 10, 11, 12K, give or take. I think somewhere around there. That's pretty much where we saw Saylor step into the market. We saw momentum build up. We saw Raoul Pal shill Bitcoin. We saw Elon Musk. We saw the PayPal announcement, Amazon announcements, which really rallied, caused the rally from Bitcoin around about the 12, 14, 15K to 20K, and then there's some form of consolidation and continuation higher. So I think eventually we come back down to those levels. I think would make a lot of sense to me. The question is, will we? I don't know, but if we do, I think that's a fantastic area to start accumulating Bitcoin. I think when you look at the Fed's policy, when you look at the macro environment that we're in, we're still in the very early stages of QT, and I just think people are living in a fucking pipe dream when they think that the Fed will revert its policy back to QE in a matter of months, despite the fact that we've just only had 1 month of QT, and that was the reduction in the balance sheet on 15th of June. So it wasn't exactly the 1st of June. It was on the 15th of June, so literally 20 days ago, 3 weeks ago. So yeah, I think 12, 14K, if those levels come, that I'm very, very interested. But we'll have to wait and see.
I think so too. I think so too. And what I'd like to do is I'd like to just quickly share my screen one more time here, just to this is a very, very basic chart. So what I do is I've got about 3 to 4 Bitcoin charts where I do different things on each chart. So one chart is a complex chart with multiple SRs. One chart is simple like this, and another chart is another messier chart, which I try and put all together to make my narrative. Now, one of the things that I was looking at was just sort of when I zoom out. When I zoom out, if this was a 5-minute chart, just to keep it simple, we've got a range bound environment here, we've got a range bound environment here, and all we're really doing is we're just retesting the range that we had here, isn't it? In a very simple sort of fashion. Now, one of the things I was thinking was if we was to come back down here and we was to sort of accumulate, then it's not so much dependent on time, but I think once we break out of this range, similar to how we did here, I think that could be potentially very bullish for Bitcoin. Alternatively, of course, we could wait for it to get back in a range like this, which, putting price aside and not looking at any sort of numbers, that would also be bullish for Bitcoin. But how would we get there? How would we get there? We were talking the other day and we spoke about the recession and we spoke about the money printer. Do you think that they'll turn on this money printer before they change the currency of the dollar? Do you think that would be something that's possible?
No, I don't think it's going to be possible, Naz. I think there's this misconception in Twitter that, perhaps there's potential for Bitcoin to replace the financial system and there's going to be obviously devaluation of the dollar. I can't see FX currencies going anywhere anytime soon. We have a global complex system built upon FX settlements, transactionals by various institutions and banks across the globe. But the dollar is the key pivotal in all of it. And as we know, when there is a reduction or quantitative tightening of dollars, then there's a big dash for dollars. Because if you think about oil, for example, oil is traded in the petrodollar. Obviously, there's the yuan nowadays where you can buy oil with the yuan. But essentially, I think the dollar is still going to be central. Maybe in the decade's time, who knows, with the introduction of CBDCs. But I think, again, CBDCs just really is some form of Operation Big Brother, where they can really control your finances and really control every aspect of your life. So, for example, organizations, certain countries, developing countries often pay cash in hand, which, taxes don't get declared. But if everything becomes a paperless digital system, then guess what? Everything is deducted automatically. All your transactions, all your monetary aspects is dictated by central banks and governments. So it really is, for me, it's a frightening thought, because at the will of a few lines of code or software, they can really suspend accounts if they suspect any fraudulent activities or any, if they have doubts about your activities. But then again, in terms of Bitcoin, it's decentralized in that nature. I think as long as there's no strict regulation around Bitcoin, I think it gives developing economies the freedom to send money from A to B without really any intermediary. But will it replace the dollar? I really can't see it happening. I think it can perhaps coexist. But look, at the end of the day, I'm very speculatively bullish on Bitcoin. I think heading into the next halving could line up quite well with the Fed's policy, with global policy. If we are heading to a recession, often nothing kills inflation like a recession. And if we are in the midst of a recession over the next 6 months, I think that is max opportunity in 2023, where you start scaling into Bitcoin, positioning your portfolio accordingly for the run into 2024, and who knows? We could see a pickup in growth. We could see a pickup in the Fed's policy. They become more dovish, and they might start re-stimulating the economy. And if they start doing that, that's going to introduce a cash injection of liquidity into global markets, and that will increase risk appetite. And with Bitcoin being a beta asset class in comparison to equities, we should see a fairly significant move up higher. Look, at the end of the day, look, if Bitcoin does come to 10,000 levels, right, a move up to 30, 40K is still a 4x. That's very significant. That to
Yeah.
me is still a
What
good
other
info of the
market?
bull run.
What other market could give us returns like that? That's something I don't think stocks can do anything along those levels. So from 10K to 40K, I completely agree with you. I don't think I think I'd be a buyer, to be honest, depending on what the current status of the market is. But I know that there would be a lot of fear being sort of circulated in the market if we sort of went down to levels like 10 to 12K. But I think I would personally be a buyer myself. I don't think we're going to go back to the sort of 3 to 6K levels like some people are predicting. 10K for me sounds like a really good opportunity, especially given that you're buying at such a discount. Bitcoin did in fact hit 70K, didn't it? And
Yeah.
albeit we need to take that into consideration when looking at how low Bitcoin can go. I think at the same time, this has been the biggest pop that we've had sort of in the previous cycles. We've not seen a correction as sort of violent as this. I'd argue that this is sort of, I think that if we do go to 10K, it will be worse than the COVID crash. Do you have any sort of advice for people that are trading Bitcoin at the moment in terms of if we did go to those kind of prices, then what would be the sort of safest bet in terms of how to play Bitcoin to the downside? Do you think it's worth shorting Bitcoin still towards 10K, or do you think now that most of the shorting has been done, it might potentially be better to sort of sit out and wait for a buying opportunity as opposed to a shorting opportunity?
I think it depends. Look, I'll just be honest with you. So there's quite a lot of smaller questions within the bigger question context for what you just asked. But look, so the first question is, price predictions on Bitcoin. The second question is trading versus investing. The third question is, if we go lower, what can we advise investors? Look, it's very simple. As far as I'm concerned, if you look at the cycle that we've had in 2021, 2022, you can look at the high IQ club, and they talk a great talk about Bitcoin going higher, the network effects. Well, why didn't we get 100K Bitcoin like Plan B? I'm not slating Plan B. I'm not shitting on him, but it's just irrelevant. I couldn't really give a fuck what people say in terms of price predictions. I think it's foolish to consider 3K, 6K, 9K, 12K. I think it's stupidity to consider that Bitcoin is going to go to all-time highs if we can't even reclaim 30K. So just look at what's in front of you. If we're going to talk about 12K, 10K, then we need to see price start breaking back below 20. Then it increases the probability that we trade down there. Whether we get to 3K, again, you've got to lose 10K. So there's no point in entertaining all this price prediction. It doesn't do anybody any justice. Secondly, right, there's a difference between trading and investing. As a trader, Naz, it doesn't matter. You touched upon the fact that has a shorting opportunity passed by. Not really, because when you trade, everything is relative to risk to reward. I could trade a 5-minute chart and get a 5-hour trade in there, right? I could trade the weekly chart and get a 5-hour trade down to 10K if I was targeting 10K. So really, there's opportunities on every time frame. But obviously, the higher time frame, the more patient you have to be with your trades. You can take the same setups on the lower time frame. It's all about position size. It's all about risk management, risk to reward. If you don't understand that, you're not ready to trade. It's as simple as that. When people say, oh, look, there's still potentially 20, 30% left to the downside on Bitcoin. Well, my question to you is then, what about FX traders when they only get 0.5% or 1% a move a year? People mock FX because, it's not volatile. It is volatile. It's all about position sizing and according to position sizing, risking within the boundaries of the market that you trade. So it doesn't really matter, whether Bitcoin drops 20, 30%. It's about, from a trading perspective, look at your risk to reward on the timeframes that you trade. The third aspect is now, if you're an investor, look, I'll be honest with you. I'm obviously a trader, Nas. I think if you're an investor, I wouldn't get caught up in trying to trade the charts. It makes a lot more sense Just enjoy life, mark out your levels, use some high time for moving averages. And if you look at the laws of what the data shows you, there's a high probable chance that a simple set of series of moving averages has out-traded probably 80% of CT to the downside in terms of drawdown, right? So again, you can rely. We talked about this on the last stream where you look for compression of moving averages, you look for price to establish a range, right? Right now, we don't have a range established on the weekly time frame. 2-3 weekly candles does not define a macro range. We're not going to get a V reversal. You talked about, the laws of the COVID crash. We could see something similar. I disagree. COVID was event driven. COVID was a shock to the system. COVID was a black swan event. This is ongoing structurally, has been and continues to bleed lower since November. So 6 months, 7 months, 8 months for price to get down to where it is today, at levels that many didn't foresee. So, and yet we're only in the middle innings of the economy in terms of heading into a recessionary environment. You have to remember that in Europe, we're at the highest levels of inflation over the last 30, 40 years. In America, inflation remains sticky. So what objective or what incentive is there for asset managers, institutions to really expose themselves to risk when really they should be playing the markets in a much more defensive approach? And when there's a defensive approach and the liquidity is thinner across global markets, any single event or announcement can send the markets plunging lower. Whereas good news may give a relief rally to the market, but eventually we'll probably see a fade back down until the Fed and the Western central banks really get a grip of inflation. And if you look at the euro as well, there's concerns about the euro reaching parity to $1. €1 equals $1. So it really isn't risk on environment. If you look at the bond market as well, the bond market, some of the best bond traders are talking about now, positioning long in the bond markets after bonds have been getting smashed for the best part of the last 12, 18 months. So there's a lot to really take into consideration. But really, when you look at it from a simple perspective, it all comes down to global liquidity now. You've got G5, G7, M2. When you look at global liquidity supplies across the market, there's a very compelling correlation. Global liquidity topped out in mid-November, and that was a turning point for liquidity, and that was a turning point for the market subsequently. So make of that whatever you want. There's a few really good accounts on Twitter that I really recommend following when it comes to tracking global liquidity. And they're the types of information that I really pay close attention to.
I mean, that was heavily detailed. There was a lot to say there. There was a lot to say that was beautifully explained. So I do really appreciate that. One thing I will say is that what I've noticed, especially in this bear market, is that a lot of the traders in this bear market are actually from this cycle. They're actually very new to trading and the crypto space, albeit some of them have experience in FX. But a lot of the people who were sort of in the 2018 bear market didn't really stick around. And the people that we have now, the wider community that we have now, are very, very new to trading. So given that, that explanation that you gave a moment ago, as amazing as it was, I understood it. What would you recommend for people that are fairly new to the game? I know that there's a lot of reading and a lot of video content that can be watched, but is there sort of anything that you could recommend in terms of how to help improve somebody's trading if they're inexperienced? I myself am looking to create a TA series for these guys. These guys, the community that we have at the moment is really strong, really positive. They often give us good feedback and they give us good engagement. But what would you suggest other than just TA? I know that being being in tune with fundamentals is just as important as being in tune with TA. So it's all good to learn about ranges, but how would somebody who's blind slowly work their way to get to a point where they could describe something to me in the way that you've described it to me? What would you recommend?
The first thing that people have to remember is it's not a sprint, it's a slow marathon. If you want to make it in this market, it's all two things matter: risk management and cash preservation. Okay. If you move to the upside, fuck it, it is what it is. But You'd rather miss moves to the upside than be heavily exposed and watch your entire portfolio shrink by 80%. Okay. There's nothing worse because that will mentally shatter you in terms of your emotions, in terms of your lifestyle. You're going to have bad relations at home because you're stressed out. I've been through that myself, But secondly, what I would say is that ask yourselves, are you serious about trading? Do you have the time and the commitment to trade? Because it is really absorbing now. So, I used to spend 16, 18 hours a day in 2017, in 2018, in 2019, 2020, where I'm now in a position where I can look at the markets, take a glance, and decide whether I want to trade or not. It's literally become that easy for me now, understanding the levels that I want to do business at. But it took a lot of sacrifices, a lot of bloodshed tears, arguments with friends and families, and not really maintaining relationships. So it really does have a detrimental impact on your life. So the ultimate question is, are you willing to make that sacrifice? And unfortunately, I call it sacrifice because you are giving a lot up. Because if you have too many distractions in your life, then you're never going to be able to nail trading as when you start out with learning. So then you've got to ask yourself, okay, am I a trader or am I an investor? If you're an investor where you want to enjoy your family life, you want to enjoy family time, you shouldn't really be dropping below the daily charts. You should be looking at the daily, the weekly, the macro pictures, and just learn basic TA, support, resistance, understand market cycles, understand accumulation and distribution, understand the basics of supply and demand and market structure. When you can do that and you've got good risk management, then you can wait. You could wait for 3, 4, 5 months for Bitcoin and altcoins to drop under the 30, 40%. Do some research, watch some YouTube videos. You cover some great content and ask yourself, in terms of fundamentals. I'm sure you'll be covering projects for the next cycle. And it's about getting early into those projects. What's the new shiny shit coming out in 2023, 2024? That's where you want to be positioning for that 5-10x, and make a note to yourself that once price rallies, I'm not in it for the tech. I'm here to make money. Because look at it this way. If you've got something as little as 1,000 or perhaps $10,000 to invest in, if you can hit a 10x on that just by 2-3 trades in a year, playing the market cycle, there's 100K. Cash out 90K, put 10K back into the market. That 90K there is for the next market cycle in 3, 4, 5 years time from now. When the market cycle comes to where it is into a similar position today, and you feel confident risking that amount of money. Now, bear in mind, you've had 4 or 5 years to learn the skills of TA. So you can take a small account, put $500 in the account, and just trade it for the next 2-3 years until the big macro cycle comes. When the big macro cycle comes in the next future, wait. So you've got 100K now from that 10K off a 10X play. You can now take 50, 60K, risking half the capital. You've banked off, you put another 50K in the market, you're looking for another 10X, there's your $500,000. It sounds simple in principle, but it is definitely doable if you understand the macro cycles.
We are all, I guarantee you, I'm the host of this show, and I'm feeling like I can't keep a straight face. So I'm 100% sure that the 200 plus people we have watching right now are all feeling exactly the same way. There's just so much clarity in what you're saying, and this is the beautiful thing about it for everybody watching, right? You have hope. There is hope. You don't have to become this person that is trading on the 15-minute chart and scalping 15, 20 scalps a day. You don't have to do that. This is the whole point of what XO is saying, and this is why I look up to him so much. All it takes is, and I learned this from my previous experience as well. A lot of the people that made it in 2021 didn't actually join the crypto markets in 2021. They joined crypto in 2018. They worked hard from 2018 to 2021. They suffered. They had to sacrifice those relationships. People were calling them crazy. People said, you're deluded for thinking Bitcoin could do X, Y, and Z. You're deluded for thinking that you're going to make it as a trader. You're deluded for thinking that you could buy into the illusion of what Bitcoin and cryptocurrency have to offer. But as you can see, we've got somebody successful here with us who did ride the previous cycles, who is telling you guys in a very crisp and clear-cut way that you guys can do it too. And this was the important part of bringing XO on for everybody here today, to show you guys that XO is a man just the same way that I'm a man, the same way that you guys are men and women. We're no different from each other. It's just about who is willing to stick around, put the work in, and sacrifice their time for something that they believe in. You know, everything that you're saying, EXO, like I said, I can't keep a straight face. I'm always learning from you. Always. It's insane how much I learn from you. But
I appreciate it.
no,
Look,
man, I appreciate it,
look
bro.
now,
I
so,
appreciate
in all honesty, look, man, real talk, you and me have communicated. How many times have I said to you, literally around the market tops? Remember, if you look back in May 2021, I said, now's get the F out of the market. You've got to start
yes.
scaling out.
Yes.
I said the same to you back in August 2020 at the DeFi top. Get out. It's looking frothy. So really, the key to being successful is not about can you hit a 10x. The 10x's will come. I'm telling you that they will come. Every cycle, there's some brilliant opportunities. You can get a dart, blindfold, throw it, and you're going to hit some form of jackpot. But the key is unrealized P&L is not P&L until you've banked it, until you've cashed it. And what's been key for me, right? I've been there in 2017. As you've been there, I've watched you trade. I've watched you throw back in the days, you know, 1 Bitcoin and you've turned it into 10. And then several weeks later, you're back to flipping half a Bitcoin. Like, Naz, what the hell do you do? Why the F didn't you cash it out? It's a shit project, you know? Metin was a classic example. Do you remember Metin?
Oh my god, Metin! No, bro, that was actually a sick trade. That was actually a super sick trade. Oh, it took me so long to nail a trade like that, and I gave so much of it back to the market.
Yeah.
I couldn't believe it. I couldn't believe it. But you know
that's
what?
that's my point, right? And you don't need to be a genius to catch the bull runs, right? Because everybody's euphoric or everybody's really getting bullish. The key is, right? It's you against the market. It's you against other bag holders. It's you against other people. When are you going to take profit? And who's going to be holding your bag? That's the way that I look at it. And another way that I think of markets, right? If I'm up 10, 15x on a coin, on a position, why the fuck should I hold that and let other people take my money off me and watch it depreciate in price? I want to be first in. I want to be one of the first ones out, not first in, last out. Like where you've watched it go all the way up and then you're watching it come all the way back down, because that's what we did in 2018. There was many positions. Like I can, if I realized the profits that I could have achieved, it would have been 8 figures. I'll give you classic examples. You know, sometimes I fucked up really good trades. We bought BNB at 16, 20 cents. I put $4,000 into BNB at 16 cents. If I held it to say $500, that would have been $10 million profit, but I sold it at $2, right? But then on the flip side, BQX, which is Voyager now, right? Bought out by Voyager. I got into that at 20 cents. I watched it go to $10. I had literally almost a 7-figure P&L. Did I cash it out? No, I watched it come all the way back down to $1 again. I thought, F this, I'm out. And so I'm cashing it out after an 80% drawdown. At that point, you realize that, you know what? With a bit of patience, you can nail the big runs. But really, you need to focus on drawdown, on risk management, on protecting your cash preservation, locking in the profits as you go up. It's not about nailing the tops or bottom. It's about paying yourself. If you can take 10K to 100K, you're in a very good position as long as you're not degenerate about it, because you can then take 20, 30K, 1/3 of that, reinvest it in the next 3-4 years. And I'll give you a classic example, Nas. When you and me were trading in 2018, 2019, 2020, how many times did I say to you, Nas, look, we took a big hit in 2018, right? Thankfully, I had enough money to one side, and I would not touch that money. I waited 2 years before going all in into the markets. And that was when we talked about alt season at the end of 2020, early 2021. DOT was $3. Atom was something like $7. Rune was $1. KSM was at $50. All of them did 10x's. TVK, that was at 4 cents. That went to $1. That was a 20x. Poker Starter, again, that was 15, 20 cents when I talked about it. That went to $8. I didn't nail it all the way to $8. I exited the market around about $4. But again, those significant gains, cash your money out and just wait for the next cycle. And I've been very clear on my live streams that, you know, I've been in cash 85, 90% since November. I'm now 95% in cash. The 5% that I had in alt exposure, right? So I left 5% of my equity in alts. Guess what? Today, that 5% has taken a 90% drawdown across the markets. My also got smashed. Thankfully, I only had 5% of my capital. That now is barely a pot to piss in compared to my overall portfolio. I've just watched it go to shit, thinking, all right, let me just hold some of these for a long-term play. But my point being is nothing really is a long-term play. It's all cyclical in nature. So even that has taught me a lesson in myself. You know, I need to be perhaps completely ruthless, or I need to start hedging shorts and really have a long short type of portfolio when it's time to gain cover for downside risk. So this is where I've really started taking an interest in macro markets for the last 2 years and looking at options, looking at ways I can hedge portfolios. So you're really taking advantage of markets. And if you really want to become a good trader, you can nail alt season on the way up, and then guess what? You've got an alt season on the way back down. And this is something that I've waited for now. So you know this, 2018,
Yes,
we didn't have the skills to short the market. We didn't have USDT futures, perpetual futures like we do today. And I've waited 3-4 years. I've shorted the markets for the last several years, practicing my skills, and this now, my performance over the last 12 months has been testament to all the hard work that I put in, where now I'm picking off high time frame macro levels that, okay, this is a short, that's easy money there, that's easy money there. So it's a good place to be. But it again, like I said, the question is, do you have the time for it? Do you have the skill for it? And if you want to learn to trade, if you can't convert a $500 account to $5,000 in the time of a year, why should you be putting $10,000-$20,000 into account to trade? Because the chances are you're going to blow it, and you're going to blow it again until you have a systematic way of becoming profitable. And the only way you're going to become systematically profitable is, one, you have a trading manual that you understand your trading. Two, if you can choose 3 setups, can you explain those 3 setups to your friends or families in a way that makes sense, or to other traders? Thirdly, do you have quantitative and qualitative analysis behind your trading? Can you quantify your trades? Do you have metrics? Do you know what your best trading setup is? Do you know what your worst trading setup is? It's not about improving your weaknesses from a trading setup. It's about working on your best setups. And you only need one strategy, one successful strategy, and you just keep rinsing and repeating that same strategy over and over and over again. And that's all I do now. If you look at a lot of my systems, it's not easy to pick apart, but it comes with experience. It comes with understanding microstructure. All I trade is deviations and reclaims. That's all I do. When I see a deviation or reclaim at a high time frame level, I'm going to floor it. That's where I risk 5 to 10% of my trading account, not my entire portfolio, just my trading account, into those big positions, because they're the big levels that I target once or twice a month for those big trades. Everything else is just small bread and butter trades in between, until price really comes into a level that's attractive to me, that I know that my system tells me I've got a high probability of being right here. But I could be wrong. But like I said, it's about thinking in probabilities.
And this is the thing. I'd like to. I think you made a very, very, very interesting point there. This is the thing that I struggled with so much, in my trading, and it's something that I know everybody else in the chat struggles with as well. By the way, we've got 230 people watching, absolute legends. Please make sure you're taking a second to subscribe to the content. And if you haven't already, like the video. It does help support the content. Thank you very much. Appreciate that. But going back to what I was saying, just off XO's point, one of the issues that I had in 2018, 2019, and even 2020 was there was this desire, there was this constant need to be in a trade. And I remember it wasn't just XO, it was SC as well, who kept trying to drill it in my head to say, it's not about being in a trade. It's not just about making the money. Making the money comes at the end. You've got to be able to follow through and pick the trades that match your strategy, the trades that match your setups. If all you know is one pattern, then why are you waiting? Why are you taking 5 or 6 trades a day? Why aren't you waiting for that pattern to unfold? One thing that a lot of people need to hear, and a lot of people don't know, is that there is always another trade. The market has been here for a lot longer than you have, and the market will be here for a lot longer after you die, and after your kids die, and after your grandkids die. And I mean, I can't believe how much alpha we're getting from XO here. But
I wouldn't call it alpha, bro. It's at the end of the day, it's just my own experiences. I think you've got to understand there's different types of traders, right? There's people like myself who are swing traders primarily, because that's where I size in, right? If you put me up against the likes of low time frame scalpers, say like Jim or Magus, right? I'd probably be shit compared to them, because I'm not a scalper. I don't trade lower time frames. I can do if I want to, but I'd rather use my time more efficiently, enjoying life, right? because I'm at that position now where I can afford to enjoy my life, wait for my levels patiently. I don't feel the desire to be in a trade anymore, right? But the key thing is that, look, I'll give you classic examples. I've tried to short Matic a couple of times last week. Yeah, I could have taken profit. Instead, I took very, very small losses because my positions weren't that big. But when Matic hit 60 cents, I knew that was the level that I want to go big on. And that's exactly where I probably shorted with 3-4 times more size than the other trades. So even though I took small scratches on the way up in terms of losses, right? Even though I could have realized some profit, the reason why I kept those positions was because, okay, if I miss the big move, at least I've got something on. But I don't mind being stopped out. I've literally lost 1% of my trading account, but now I've made back 7% off that one trade. I took 2 losses, lost 1%. I tried a third attempt and I've made back 7% of my account. That's 7% account growth, which for me is fantastic in a week. And that's something that I probably aim for in a month, right? Especially when you're trading. I mean, I showed you the P&L the other day, Nas, without
Yes,
really
you did. Yes,
revealing
you
the
did.
figures. And it's once you get to a position where you realize it comes down to thinking in probabilities. When you see a setup, you need to ask yourself, is this my best setup? Or is there a fairly decent chance that, okay, I'm being aggressive, but I could be wrong here. Therefore, I don't want to risk as much because I don't have as much conviction. When I've got conviction at a setup, that's where I'm willing to risk more, and I know exactly at what point I'm going to be wrong. But again, it's about thinking in probabilities. That's the mindset that I have now. It's like thinking in risk to reward. If I short this, what is the probability that this could squeeze higher, or is it already overextended? And how much room am I giving myself to breathe? So there's a misconception that trading people, sometimes when they share a P&L, people think, oh yeah, he shorted along the market at say 56, 57 cents. Bullshit. I scale into my positions. I'm not trying to nail a top or have a single entry. I'll jump in a third, get a feel for the market. If I think it's showing weakness, I'll add a bit more on. If I think it's going to squeeze higher, I'll cut a little bit off and just add slightly higher. So I'm really trying to build a position around what price is doing, understanding where I'm really wrong. And really, if like price spikes up and drops back down, I'll add a bit more because that was a stop run. I didn't get stopped out. I gave myself breathing space. Whereas historically in 2018, 2019, I would have taken one big position size. Once price starts pushing against me, I shit my pants, cut the position, and the price eventually drops in the direction that I want to. So
Can I hold you up on that, on just that bit there? Because a lot of people ask me this, and you've said it. I knew at some stage it would be said, but you said yourself just there in 2019. You would go in one big position, price would go against you, you'd shit your pants, etc., etc., etc. Now, one thing that a lot of people don't realize is that you're just the same as us. You've just put the work in. How many times did you want to give up during those periods?
it wasn't a matter of giving up. It was a matter of it's you against the market and it's you against yourself. For me, the goal has always been to take a 10K account and trade it to 7 figures. Okay. To say I've done it. I didn't do it by buying a shit coin and watch it go to 50x. That's separate. That's a separate conversation, right? It's about, do I have a systematic way? Can I prove to myself that I'm a successful trader? Can I take a 10, 15, 20K account and convert it over $2 million in the space of 2, 3, 4, 5? I don't care about the time. I'm not trying to put myself under pressure where every month I've got to earn this much money. It's about, I want to be patient over the next 5 years. Can I take a 20K account and trade it $2 million? I'm not going to comment on whether I've done that or not because I don't like to give too much away in terms of my own financial situation. But, these are the challenges. And you can set yourself the same challenges. You can start off with a $500 account and say, okay, in 12 months' time, I want to get to $500. I want to get to $500 by the end of the year. But your objective should be, I've got $500. My first target is to get it to $600, then $700, then $1,000. Okay. And if you drop below $400 or $350, if you're using correct risk management, then maybe stop trading, understand where you're going wrong, and then try again. Okay. Keep doing it until you have a systematic way of trading. Once you start hitting those milestones, right? And it is a grind sometimes. What you're looking for is a fairly decent, smooth equity curve. You don't want to see an equity curve that's going zigzag and then you just blow your account. You start again, you build your account up, and then it blows out again. Well, clearly you've got an issue there. You can trade, but your risk management's shit, right? How many times do we see people build up their accounts and then one bad trade is all it takes for them to nuke, And that one bad trade can be due to, once they're offside in a position, guess what? They start adding more, because they think, yeah, this is going to be the top. No, this is going to be the top. Let me add a bit more. And at that point, they've oversized and they're close to the liquidation. Price, what does it do? It continues ripping higher. They liquidate out of the shorts, or on the way down, they liquidated out of their longs because they've oversized. It would have been so much easier to just accept the fact that you fucked up, you got it wrong, start from a scratch, take the small loss, start with a clean slate, look for the next trade, look to get back your losses, and then try to make some profit again, as opposed to adding to a losing position. And that's something that I did quite often in 2018, 2019, adding to losing positions where you realize, hang on a minute, this is bullshit. Would it have just been so much easier if I just cut the position, took the loss like a man, and say, okay, right, next trade, let's get on with the next trade, instead of just having no real system, just adding to a bullshit position where all it was doing was just eating into my P&L.
Yeah. I mean,
common mistakes. And it's only till you go through that cycle that you realize that sometimes when you take a trade and it looks shit, it's going against you and it doesn't feel right. Not just it doesn't feel right, but you know exactly where price shouldn't be going. Just cut it. You can always get back in once you see more probability of being right. Take the small loss, get back in, you'll make it back. And that's a classic example of what I did with Matic. Like I said, I took a 1% loss on my account with 2 trades, right? Even though I could have taken profit, but I didn't. It was unrealized. I took a small scratch. Fair enough. If it comes higher, I'm going to reshort it from up there. I'll take the small loss because I know I can get a big trade eventually. So as long as you, like I said, people with a 30% win rate can do extremely well if they manage their risk. So you're only nailing 3 out of 4 out of every 10 trades. You're looking to nail 3 or 4 because it will. Hopefully, if your position sizing is correct and you've got conviction and you know what you're trading, you will come off better, even though you're losing more trades than you win. It's about effective risk management.
Agreed. I will be doing a video. A lot of you might be new to this stream and this channel. If you haven't subscribe already, because I will be releasing a small TA series very, very, very soon. And the first video that I'm going to be doing is risk management. It's the one that I've had the most demand on. A lot of people just don't understand what risk is, what a stop loss is, how to use it, how to manage risk, and you touched on something that was very, very important there. You could have a strike rate of 3 out of 10, but as long as you manage your risk effectively, you could still be a very profitable trader. Now, learning something like that in the bear market, in the bull market, it will be very, very difficult for you to not succeed. You know, what do you think about that, EXO? You know, I mean, in the bull market, you know, when we have a cycle where everything's sort of pushing upwards, I find it very, very difficult to not make money in those environments. You know, I feel like everything is primed to go up. You know what I mean?
Yeah, absolutely. Look, I think at the end of the day, like I said, Nas, you know, I'm a trader. Just because I'm a trader doesn't mean I'm trading with a full size account. Of my entire equity, 90% is in cash. 10% is on a derivatives exchange or various exchanges, right? The other 90% cash, I'm not looking to trade that. I'm looking to buy Bitcoin as an investor. That's not for trading. That's just purely for investing. The 10% that I have in my trading accounts is just keep churning away, grinding, trying to hit my own personal targets, you know, where I can make a difference on my own life, but have an impact on friends and family around me to help improve or betterment of their lives and give to charity. But at the same time, it's a passion. When trading becomes a passion and a game, and you just love it, you love trading against the market. It's just you against the market. I love the game, and eventually, when you find that passion, you know, you just need to find who you are as a trader. Are you a scalper? Are you a day trader? Are you a swing trader? Are you an investor? Whatever it is, you can be. You'd have to be one. You can be both. You can be a scalper and a high time frame investor. So it's finding your niche, what suits you, what suits your lifestyle. And I think that's what it is. You won't come to understand it until you realize that you have significant improvement in your technical ability in terms of trading price action, in terms of charts. When you get to a level where you've got a very good read from a technical perspective, you journal everything, you'll have a lot more confidence in 3, 4, 5 years' time where you get to a position, it becomes a breeze. But even then, you have to be humble enough to accept that there are going to be times where you're going to be wrong. It's okay to be wrong. There's no shame in being wrong, right? The key thing is it's your portfolio. you can be wrong, but as long as you're preserving your capital, who gives a shit? You know, whether you call the top or call the bottom. All that matters in this game is that number on your portfolio going up. That's all that matters over the long duration. Nothing else matters. Everything else is noise around you.
I'm speechless. Like you said it so perfectly. I might just jump off the stream, jump in the chat,
I'll see you
and
later.
just chill with everybody else because you nailed it so perfectly, bro. I can't. How are we looking for time? Just out of interest.
Yeah, I've probably got 5 minutes left, if I'm honest with you, NJ.
Yeah, amazing. So, I mean, if anybody has any sort of quick questions that can be answered really quickly for Trader XO, maybe you can sort of drop it in the chat. But you only have a few minutes because XO has to go in 5 minutes, and we'll wrap up the stream then as well. XO, man, I can't thank you enough for jumping back on this stream. It's always golden whenever you come on the stream. I know that I'm speaking on behalf of everybody in the community in the for the NJ show community. I know everybody feels the same way. Really appreciate it, bro. Really appreciate it.
No, thank you, Dos. And again, I think you know, when I started trading in 2017, when I created a Twitter account, you know, it wasn't because I wanted to, you know, become TraderXO and have a big account. I think what it is that when I was new to the space, I just wanted to share my own thoughts, my own charts, and just get feedback and see what critiques I have on the charts. And you saw me back then. I had a couple of hundred followers, and eventually I grew and I became more consistent in my trading. And today it's evolved into something that I never ever thought would happen, and it's something that I never set out initially. But there's a key difference. On Twitter today, you have so much information in terms of wealth of knowledge. You and I, Nas, did not have this type of information shared back in 2017, 18.
No,
The level of the level of information now shared by some of the smaller accounts on Twitter is fantastic, and you guys should really be taking advantage of that. Asking questions, going out there, network with people, drop people DMs, asking questions, because you know what, the only way you can improve is by surrounding yourself with a circle of good traders or traders who are looking to improve and sharing information. That's the type of community that you want to be around, as opposed to trying to figure it out yourself all alone.
XO, so we have got a few questions that are coming in, and I've seen one question here which I really like. Out of interest, are there any books that you could recommend for trading? Or, you know, for me, I personally like to watch videos. I think I prefer sort of video content to books.
Yeah, I wouldn't touch books because I think it depends. Again, it's just such a vague question because there's so many different ways I could answer this. Like, because if you don't have any trading experience, reading books, fair enough, it's going to be time consuming. You're much more better off watching tried and tested traders who don't chat shit, who don't show you hindsight, who don't charge you, you know, paid service. But the ones that do charge you paid service, just do your due diligence. Make sure, are they really the real deal? Do they know what they're talking about? It's not about joining in a group where they give you calls. Who gives a fuck about calls? Joining a group that gives you calls doesn't teach you shit. It's like going to a fishing pond and they've already caught the fish. Here's a fish. Do you want it? It's like, get the rod, dip it in the water. And again, I'm not trying to think of acronyms or fucking statements here, but I really think of trading as fishing. You spend days, well, hours in a fucking fishing pond with the rod in the water, and you're looking for that fish to catch. It's the same with the trade. You're waiting for the right trade to come to you. You're waiting patiently. And if you can demonstrate that same type of patience that fishermen have, you'll do well because you know exactly what you're looking for. Do you want a big fish or do you want a small fish? Do you want a big trade or do you want a small trade? It's all subjective to your system. So for me, like I said, the big trades that I wait for, I'm only looking for 1 or 2 big trades a month at key levels if they come. If they don't, I'll take a set of smaller trades where I'm risking significantly less. And I'm just looking to make a bit of pocket money and change, you know, in terms of my lifestyle, in terms of, you know, making a difference to myself and growing my account. If I can grow my account, you know, 3% compounded for the next 12 months, I'd be very happy with that, you know.
Amazing.
Yeah, exactly. And I'm not trying to hit any home runs or round trip shit. So that's from a trading perspective. Now, as an investor, I'm looking for a 4 or 5x on Bitcoin and Ethereum and Solana. But am I willing to buy at these prices? No, I'm not. I'd rather buy Solana sub 20 because I think there's every possibility that Solana goes to $200 in the next 2-3 years, right?
Amazing.
But I know if I buy Solana at $20 and it loses the $20 level, well, guess what? I'm not going to hold it all the way down. I'm just going to cut my position on it as an investor, wait for the next level down, or wait for price to show me strength to get back in at 2021, 22, and hopefully trade that range before it breaks out. So now it's just one quick thing. There was a question in the chat which I think was important.
The journaling one?
No, we can always talk about journaling another day because obviously we're a bit limited for time. But
Sure.
there was one question that somebody asked, and I think it's a very good question because I did want to share this. It's about which account can people follow in terms of liquidity.
Oh yeah, sure. Would you like to maybe share your screen, or would you like me to bring up Twitter and we could look?
If I can drop you a DM, you can bring it on your screen, as. But
yeah, sure thing.
Cross-border Cap again is a veteran in the markets. You know, in terms of trading experience, in terms of having been there, seen it all, done it all, he's a pro. You know, he's not somebody 25, 30-year-old. He's a very, very, very knowledgeable man when it comes to markets. And when you look at some of his content, especially that particular tweet that I shared, it's quite compelling. The correlation between global liquidity and global markets, it says it all, really.
So this is for everybody who's sort of paying attention here. This
is
so
the handle is Cross-Border Cap. I think it's one of my top 5 favorite accounts to follow on Twitter.
Totally. That's great. That's great. Amazing. So for those of you who are interested, I know a lot of you guys were asking this question earlier on when XO mentioned it, but this is the for liquidity conditions. Amazing. Yeah. XO, I don't know what to say, man. I really appreciate you coming on the stream. I think what everybody wants to know before we wrap up the stream is, will you be back on the NJ show? Oh no,
what happens? Yeah, everything's gone blank.
Can you hear me?
Yeah, Nas, I can hear you. What happened?
So I guess the one question that everybody else is wondering is, will you be back on the NJ show?
I will be back on the NJ show, NJ, but I have to drop off in the next 20 seconds, I'm afraid.
No problem. Thank you so much, XO, for joining the show and sharing your insights. I'll let you go from here. I'm sure that everybody else in the chat as well is everybody's ecstatic. Everybody loves it, you know. So I'll let you go from here, XO. Thank you very much for joining the show, and I'll see you again soon. All right?
Absolutely, Nas. Take care. Thank you very much. Cheers, guys. Have a good day. Take care.
Cheers. Bye. Okie dokie, guys. Okie dokie. So that was another episode with TraderXO. Amazing episode. So much insight, so much knowledge in that episode. You guys are going to have to go back and you're going to have to break down the episode in order to really understand what XO was talking about in terms of, gosh, there was so many subjects. But look, this is one of many things that will be coming on the NJ show. I'm going to bring more guests onto this show to help you guys understand crypto better, to help you guys understand markets better, and to help you guys understand just the overall consensus of trading better. I will be releasing a TA series very soon, but in order for me to do that, I need your help. Okay, I need everybody in the chat to help me out. I need you guys to subscribe to the channel. It takes a second of your time. I need you guys to like the video, like the content, because it helps with the algorithms. The more that this channel grows through this community, the more content I'll be able to bring out for you guys. And I'm really excited. I'm really excited to be doing the next video that I'm looking to launch, which is going to be a video on risk management. And that will be for you guys, all right? There's no paid stuff. It will all be free. None of this members bollocks. It will be for you guys for free. And it will be an episode that you guys can watch over and over again, just like this episode was. So the reason this works, as I always say in every episode, is because we are a community. And this community is one of the strongest growing communities in the world, all right? That is cryptocurrency. So please, if you haven't already, like the video, subscribe to the channel, and I will see you all tomorrow at 12:15 p.m. BST for another episode of The NJ Show. Goodbye, and take care.